our module number 2. So we are still in the taxation for individuals. So we are now in passive income. So when we say passive income, this is any income or money that is earned that do not require any effort, or you just simply put in your capital and wait for the return of your capital. Okay, so that's how you earn your passive income. Another definition of passive income is this can also be a one-time and a non-recurring earning of money or income, just like winning or receiving prizes. Okay, so this is what we call passive income. Unlike your compensation income, you have to work for it and for your business income. Okay, so we have here the table for the specific passive income and its corresponding tax rate. So for passive income, we have a final tax rate for this. Okay, so we have here for the first table, this is on certain passive income for individual citizens and resident alien. So this will be applicable for these taxpayers. Okay, so the tax rate in general, okay, so both individual citizens and resident alien will be taxed. Okay, as mentioned in our previous video lecture, for their compensation income and business income, so they will be using the tax table, graduated tax table that we presented in the income tax discussion. Okay, but when it comes to our passive income, we have here the following. Okay, so for interest from currency deposits, okay, so if the taxpayer has deposit and earns interest, okay, from this specific types of deposit, currency deposit, trust funds, and deposit substitutes, so they will be taxed for 20% final tax, okay, of their interest income. Second is royalties. So an example is for the books, okay, as well as any literary or musical compositions that are being sold. Okay, so if they earn income from royalties or from the sales of the books, literary or musical compositions, so they will have they will be taxed for 10%. But in general, royalties other than books, literary, and musical composition, other royalties that will be earned, okay, by the taxpayer, so it will be taxed for 20%. 10% is only for the books, literary, and musical composition, okay, because they can also earn other they can also earn royalties from the sale of other things like the design, okay, that they sell to a producer. Okay, so while that is that item is sold, they are still earning royalties for it, okay, or for just or the, like other transactions, okay, for royalties. So again, in general, that's 20%. The next passive income is your prices. Okay, so please take note of the prices. If the price is 10% or 10,000 or less, okay, so the tax rate that we will use is the graduated income tax rate. Okay, while if your price is more than 10,000, so it will have a final tax of 20%. For winnings, okay, so of course with the exception, if you win in PCSO and Lotto, these are exempt winnings. Okay, but if you win from other raffle draws, okay, so it will be taxed for 20% final tax rate. Next item, cash and or property dividends. So in this case, if the taxpayer has an investment or is a shareholder of a domestic corporation, meaning these are corporation that is created here in the Philippines and located also here in the Philippines, or from joint stock company, or from insurance. Okay, so the insurance company may also give certain dividends. Okay, or mutual fund companies, regional operating headquarters, or the taxpayer can also be a shareholder of a multinational company which has a regional operating headquarters here in the Philippines. So if the taxpayer is a shareholder of those company or entities and they receive dividends from such companies, so their dividend will be subjected to a 20% final tax. Okay. Another item is if the taxpayer will have a share of a non-resident alien individual, or in this case, this is a share of a non-resident alien individual in the distributable net income after tax of a partnership, except for the partnership of the professionals, okay, so of which he is a partner, okay, or an associate, or has a joint account or a joint venture, okay, or consortium taxable as corporation of which he is a member or co-member. So in item number 6, this is for a non-resident alien individual who is a partner of a partnership or a corporation. Okay, so he will be taxed for 20% final tax, okay, of his share in dividend or income, okay, of that partnership or corporation. Number 7, interest income from long-term deposit. So in this case, this is if the taxpayer is or they have long-term deposit. So when we say long-term deposit, you cannot withdraw your deposit for a certain period of time since it is long-term. So the minimum number of years that you cannot withdraw your deposit is at least 5 years. Okay, and actually it can be more than 5 years. It can be 10 years, 15 years, 20 years. So that's the feature of our long-term deposit. Now in this case, if the uh, the the taxpayer receives interest income from his long-term deposit, generally that is exempted. Okay, there is no final tax that is collected for it. Okay, that is the general rule. However, if the depositor or the taxpayer, he pre-terminated, or meaning he withdraw his deposit before its due date, or before its what do you call it, its deposit term. Okay, so here, for example, the long-term deposit is for 5 years. Okay, and then the first item right here is, what if the taxpayer withdraws or pre-terminated his in deposit for after 4 years but less than 5 years. Okay, so in this case, he will be taxed, okay, for his income, for his entire income, okay, or proceeds that he withdraws from the bank. The final tax for that is 5%. Okay, in the next example, if the taxpayer withdraws his deposit for 3 years, okay, but less than 4 years, okay, for example, 3.5 years, so all his proceeds from his long-term deposit will be taxed for 12%. And if the depositor or the taxpayer withdraws his deposit for less than 3 years, for example, he withdraws his deposit for 2.5 years. After 2.5 years, so all his proceeds from that deposit will be taxed for 20%. Okay, so that is for the interest income for long-term deposit. Okay, so next, number 8 item, capital from the sale, exchange, or other disposition of real property. Okay, provided this real property, for example, land, building, or a house, so they sell it. Okay, and this property are located here in the Philippines, so that will be taxed for 6%. But please take note that this sale is only a one-time sale, meaning they are not a real estate property developer that usually sells their house and lots. This one is a personal real property of the taxpayer, and he sells it because he has some personal reasons also. So if he gained from that sale, so the gain will be taxed for 6%. Next, number 9, net capital gains from sale of shares of stocks. Okay, but please take note that these shares of stocks are not traded in our stock exchange. Okay, so here, if the net capital gain, okay, from the sale of stocks is not more than 100,000, so it will be taxed for 5%. Now, any amount in excess of 100,000 will be taxed for 10%. So, for example, if the capital gain is 150,000, so the first 100,000 is subject to 5%, and the next 50,000 is subject to 10%. So that's how it is for the final tax for the net capital gains for the sale of shares of stocks that are not traded in the stock exchange. Okay, so we go now to the next taxpayer for non-resident aliens engaged in trade or business. So this is the tax table for their passive income earned here in the Philippines. Okay, so the first is for interest from currency deposit, the same also with the first table. So that's 20% final tax. For royalties, the same also with our resident citizen and resident alien. 10% if royalties from books, literary and musical compositions, and in general, that is 20%. For prices, the same rate also with the first table that we discussed earlier. So if the price is 10,000 or less, so we will use the graduated income tax rate. And if that's over 10,000, that's subject to 20% final tax. For winnings also, the same except for PCSO and Lotto. Okay, if that is less or 10,000 or less, so 20%. Okay, and if, please take note here in number 4 item, if the winning is from PCSO and that winning is 10,000 or less, that is exempt. But once your winnings from PCSO or Lotto is more than 10,000, so that becomes taxable. Okay, so it is stated here in the table. Unlike with the first one, that in the resident citizen and resident alien, if they win from PCSO and Lotto, it is exempted. So there is no limit as to its amount of winnings. Okay, item number 5, interest income from a depository bank. Okay, so here, if that is under the expanded foreign currency deposit system, so it will be taxed for 15%. Okay, next, item number 6, cash or property dividend, okay, from the partnership or corporation or company that is located here in the Philippines, so they will be taxed for 10%. For the share of an individual in the distributable net income, okay, of income from the partnership and corporation where they are a partner or associate or a shareholder or a member, so they will be taxed for 10% final tax. Okay, item number 8. So this is capital gains. Okay, if the non-resident alien, for example, has a property here in the Philippines and they sold it and they earned income out of the sale, so they will be taxed for 6%, okay, of their gains. Next item number 9, net capital gains from the sale of their shares of stock that are not traded in the stock exchange, so that is 15%. Okay, so for the interest income for long-term deposits, so I think this is the same. Yes, the same with the first table that we discussed. Okay, if they did not withdraw their long-term deposit until its maturity date, so their income, interest income, is exempted from tax. But if they withdraw their deposit for 4 years and less than 5 years, so all their proceeds from the withdrawal of their deposit is subject to 5%. So if they withdraw it for more than 3 years but less than 4 years, so 12%. And if they withdraw it for less than 3 years, so they will be taxed for 20% from all their proceeds, okay, of their long-term deposit. Okay, so the next table is for our non-resident aliens not engaged in trade or business. Okay, so we have here, if they earn while they stay here in the Philippines for a short period of time, and it so happened that they also earn an income, so they will be taxed as well. Okay, so here, for gross amount of their income derived from all sources. So gross amount meaning they are not allowed of any deductions. Okay, whatever proceeds they will receive of the income, that is subject to 25% because they are not doing business here in the Philippines. They should have the purpose of their coming here in the Philippines is to be a tourist. But however, due to some circumstances, they might have earned some income. So that will be taxed for 25 final tax, okay, based on their gross income. Number 2, if they have the property here in the Philippines and they sell it and they earned a gain out of the sale, so it will be taxed for 6%. Next, if they have a shares of stock, okay, here in the Philippines also, and that stock is not traded in the stock exchange, so if their gain is not more than 100, it's 5%, and any amount in excess of 100,000 is taxed for 10%, just like our first 2 tables, okay, that we presented. Okay, for alien individuals employed by regional headquarters or area headquarters and regional operating headquarters of a multinational company, or the offshore banking units, petroleum service contractor, and subcontractor, meaning these are the non-resident aliens not engaged in trade or business, but they are an employee of a multinational company that has a office or regional headquarters located here in the Philippines. Okay, so in this case, this is their tax rate. So on the gross income for their salaries, wages, annuities, compensation, okay, or honoraria that is derived here from the Philippines because they work here. Their work is located here in the Philippines, so they will use our graduated income tax rate table. This is our graduated income tax rate table right here. Okay, so those are for the passive income and the corresponding rates for our different taxpayers.